Hey there, Michael here with Growing Farmers and the Farm on Central. And yes, Uncle Sam did make me buy a tractor. Well, it didn't make me, but he made it very advantageous for me to buy a tractor. And that's what we're going to talk about in this video. Hey farmers, Michael here from Growing Farmers and the Farm on Central, and I am going to rant about chickens today. I wanted to talk about keeping your tarps and row cover down today, all about compost and how to make sure that you have good compost. I want to talk about our fall spinach successions here. Should you buy a new tractor? I just wanted to do my annual soil testing video. I wanted to talk all about cover crops. So I'm here in, this is January 2021, and behind me is a brand new tractor for us. And the reason why we bought it is basically, well, on one aspect, we needed a medium-size utility tractor for our farm. So not only will we be doing a lot of vegetable production, and we've got equipment for that, but we'll also be doing a lot of horticulture and mushroom growing and moving a lot of material around as we build the farm out, the 8 acres plus our retail space across the street. So we knew that we would need a tractor to do a lot of those tasks around that. So that's why we picked this up. And let's talk through the financial aspect of when I say Uncle Sam made us buy this, because if you don't understand, and again, every year it changes, so you need to talk to your accountant about this, but based on our accountant's advice, we went and bought this tractor due to Section 179. So what I'm gonna do next is I'm gonna walk over to the whiteboard and we'll go through what Section 179 is and why it made sense for us to buy a tractor that we would normally have never spent the kind of money on this, but it made a lot of sense in our business for this year. All right, so we are here at the whiteboard. And again, if you are working with an accountant, they probably made you aware of Section 179 and how it relates to businesses. And again, you want to have your business set up properly. So, again, it depends on how your accountant is going to advise you, or your CPA is going to advise you. He may advise you for a sole proprietorship. And in this case, we're in an LLC. We're actually technically now in an LLC being taxed as an S Corp. So that means everything flows through the LLC and into our personal assets, all the income we make with our LLC. So the right thing for that is at the end of the year, obviously, you're gonna get taxed any profit left in your business. Let's just say, for chance, I had $30,000 left over at the end of the year, and we could either take a distribution for that $30,000, and then all of that would roll into our personal income, and then we're gonna pay extra on that, or we could Section 179 it, and we could go ahead and make some of this disappear. And so how that works is what we do is Section 179 allows you to buy a piece of equipment on payments and expense the entire amount. Okay, so we've got a tractor. Let's say the tractor's worth, by the time it's all said and done, $40,000, okay? So we put down $3,000. That's our down payment, because they usually want to see 7 to 10% down payment. And then we put the rest on payments over 5 years at 0%. So that's $37,000. 5 years is 60 months worth of payments. So that's around $500 to $600 a month in payments. And we're paying that over that 5 years. So maybe let's put $600 in payments. Not that that's super important. But what's important is what the IRS allows you to do is they allow you to say, oh, you bought a piece of equipment and that equipment is worth $40,000. We're gonna allow you to expense all of that or as much as you need. So if we wanted to completely eliminate this $30,000 in tax liability, we just Section 179 it. And again, comes down to what your accountant's gonna say, but our accountant basically in this situation said, we're gonna wipe out that $30,000 and have expensed that of that. So now we're gonna have $10,000 left to expense for next year. So $10,000 for next year, if we want or not. And part of the reason is is, the reason for doing that is, and again, obviously next year you're going to have to pay your payments. It'll be 600 times 12, so you're going to pay $7,200 in payments. And if you at that point with those 7,200, you can expense more of this if you wanted to. Or let's say your next year has a loss. That allows you to not have to worry about that. That allows you to take more basically off the top this year and not worry about it next year. So hopefully that made sense. It made sense in our business. Again, we're excited about it because it gave us a big asset that's going to make our business so much more efficient next year. And again, we've already used that equipment multiple times. It's made a big difference in some of the projects we've had to do around here for the farm. And it made sense for us. It may not make sense for you. You have to talk to your accountant. And this is why any small farm should be running it as a farm, should have their farm finances separate than their personal finances so they can look at everything holistically, know their numbers, be working with a good bookkeeper and a good accountant to be able to see the line of sight on these things. And here's the thing, working with someone like this only costs, it's not a lot of money, a couple $1,000s at max. And again, I didn't know about Section 179 if I hadn't been having someone good advising me on this. And so that's where that may paid huge for us, save us a load on a tax bill. And then the reason for this, because you said, well, on one aspect, you could have expensed all that through buying equipment, or you could have bought your supplies for next year. And the reason I didn't want to do that is, let's say, okay, I had $30,000 left at the end of the year. Let's say I spent all that. Now, what's left in my bank account at the end of the year? If I had spent all of that on supplies for the next year, zero. And in the bank account, you don't have anything left if you're not running something like that. And I hate that situation. I always love to have reserves in my account. And so that's why I really like this, because it allows you to write out a lot of this expense while still keeping money in your account so that you don't have a zero balance. And again, with creative farming accounting, you can have CSA on January 1st pouring into your account, open your CSA enrollments. You can get around it that way. So that's another way to do it. But in this situation, this is what worked for us in our business. So there you are. Hopefully this business was helpful. If you have questions about this, feel free to comment below. But do go talk to your CPA about this if that makes sense for your business. And again, they have lots of tricks and tips for helping you. And again, it's not that you don't want to pay any tax, you don't want to pay your fair share, but if you don't have to pay tax and it's not owed because the government wants you to invest in your business and wants you to grow your business, then this might be a solution for you. So there you go. Give us a follow, give us a like. Make sure you turn on notifications and make sure you get videos just like this in your inbox every single day. Hey farmers, Michael here from Growing Farmers and the Farm on Central, and I am going to rant about chickens today. I wanted to talk about keeping your tarps and row cover down today, all about compost and how to make sure that you have good compost. I want to talk about our fall spinach successions here. Should you buy a new tractor? I just wanted to do my annual soil testing video. I wanted to talk all about cover crops